Hey, TGO traders and investors, Matt Buckley, callsign Wiz, primary and weekly options model portfolio manager here at TGO, and we're at historic highs. S&P broke through its historic close this morning, and the market can only go higher, right? Well, folks, the market and the economy could not be farther apart. Let's take a look at some of the economic data that came out this morning. Weekly unemployment claims came in a lot higher than forecast, and last week's were revised up as well. Final GDP. Yikes. An anemic 0.4% growth. We couldn't even we lowered the net, and we couldn't even hit the ball over the lowered net. This one's a little shocking. Chicago PMI, kind of a Midwest manufacturing gauge, fell out of bed at 52.4. Just not good news, folks, and the market keeps going higher, right? I mean, even the front page of the Drudge Report, anemic growth at 0.4%. And, of course, we still have the clown car overseas with Cyprus and trucks carrying cash, guards and riots and everything like that going overseas. So, yeah, we're at historic highs on the market, but things couldn't be getting a little worse. Like I said, Chicago PMI tumbles as production plunges to September 2009 levels. Wall Street Journal today talking about food stamps at historic highs as the economy, quote unquote, improves. So food stamp usage has soared 70% since 2008 to a record of 47.8 million Americans. Absolutely embarrassing, folks. So again, the market and the economy could not be more disconnected. And again, we know this because the Fed has been propping up this economy since the financial tsunami hit, and they said they're going to keep doing whatever it takes to keep propping this economy up. So again, this wealth effect is helping nobody but the rich and the people on Wall Street. The poor are getting poorer and the rich are getting richer. So nice job, Mr. Bernanke. Nice job, President Obama. Everything's going great, and it's absolutely going horrible. It's going great for the folks on Wall Street. It's going great for guys like me who can trade the hell out of other people's stupidity, such as theirs. But it's not going great for people on Main Street, and this thing's going to end poorly. We are Cyprus, folks. We're Cyprus. We're bankrupt, and the government, the only place the American government can look to find money is you. So get ready. It's coming. And it's interesting today, seeing very weird price action. For example, Apple absolutely fell out of bed the past couple of days. BlackBerry came out with earnings this morning, actually surprised the street. So Apple had seen a little bit of a rally for the past couple weeks on a weak Samsung Galaxy launch and also, quote-unquote, weak BlackBerry sales. So it caught a nice little bid of late, and then it's fallen out of bed. It's over for Apple. I put on a bearish double vertical weekly in our weekly options model portfolio because I really think institutional sellers are getting ready to pound this thing back down into its grave. I think it's over with for Apple. But check this out. On a day when Apple's getting pounded, Google's getting pounded as well. And this is very odd because of late we've seen as money flees Apple, it usually heads into Google. And we're not seeing that. We're seeing Google fall out of bed as well. But historically, folks, Google tends to do this around what? Earnings. As you can tell, Google tends to do a big slide into earnings historically. Why? Because they usually crush it on earnings. So institutional sellers usually take the profits before earnings, get in, and then ride it back up. So seeing a lot of interesting price action today. Not doing so well in our weekly options model portfolio because it had two separate trades, one on Apple and Goog. And as I said, it's extremely rare for both of them to be moving in lockstep, especially on a day when the market is up and the S&P's at historic highs. So seeing a lot of interesting price action today across the board. And none of it's good. Okay? Again, the market might be at historic highs, quote unquote, but the underlying fundamentals could not be worse. And I think this market really sees its 5, maybe 10% pullback based on Q1 earnings. And we're about to end our earnings season. So don't trade this market solo, folks. Make sure you're trading it with an experienced wingman who knows what's going on in the market to potentially help you out. Okay, happy hunting. Make sure you hedge. Market is closed tomorrow for Good Friday. Have a holy and happy Easter, and I'll be back Monday with Wealth Creation Investing's Monday Market Outlook. We'll see you.